So I want to go over the euro US dollar trading setup we had today. The setup was not as per my rules 100% because the higher time frames sell side liquidity was taken out and I didn't want to go in this trading setup or opportunity. So euro US dollar, what we saw was this prior to the London opened. Price was somewhere here, and this was before this move down, just for information. And on the daily, what we had was this beautiful daily structure. As you can see, price was making, as you can see, the higher highs, higher lows here. So we can say that price was in this bullish structure overall. So that was from the daily, this daily charts price action. And yesterday we had this bearish candle to the downside. So because we had bearish candle to the downside within this bullish structure, we said that maybe price want to retrace even more before maybe continue moving higher again. So this was the idea, the euro US dollar. What we also saw was this bullish fair value gap zone, and yesterday price closed below it. So we can also mark this swing low here and also this swing high. So this was everything we had to know from the daily picture. So bullish structure, but we had this kind of a bearish momentum. Now on the 4 hourly, what we noticed on the 4 hourly today was, of course, just by following the price action, we can see that after price took the Friday highs here and spiked on them, we had nice structure shift to the downside. Price moved down yesterday, we had a small retracement, continuation lower, and then price retrace today. So we said as long as this swing high is holding, we can look for potential leg lower, targeting at least those yesterday's lows down there, and that was idea on the 4 hour. So just by focusing on the highs and the lows, the liquidity levels, we can mark those levels up. We can see this was the swing high from yesterday, so we can extend this level, and we had also swing low, the yesterday lows down there. So what we noticed also on the 4 hourly was after price broke to the downside yesterday and broke all those previous swing lows here, we had also bearish fair value gap zone between this one and this candle down there. So we can mark those levels, this zone actually, by connecting the low of the first candle and to the high of this third candle, and we can extend this level. So what do we see here is also how daily fair value gap zone and 4 hour fair value gap zones are kind of overlapping. As you can see, we can come up with this fair value gap level here, working as a resistance in combination with yesterday highs here. So we mark this level up. This is the liquidity level we were focused on, and we had swing low down there. So overall on the 4 hourly, we saw this bearish structure, and we said that as long as the market is holding here on that strong level of resistance, we can look for possible opportunities for possible short trades. So this is everything we had to know from the 4 hourly. Now on the 1 hourly, of course, when we start with our trading session before London opens, we have to mark also the Asian session lows and Asian session highs. So as you can see, this is the Asian session low, and this was the Asian session high. So after the Asian session high was formed, and as we were approaching the London open, we also noticed very important information. After this Asian session high, price actually spiked, took this buy side liquidity, resting above those Asian session highs. So when this is happening, this is very high probability, let's say, timing to look for potential market structure shift and opportunities in the opposite direction. So we understand that daily is bearish, based on the yesterday's candle, it's in bearish momentum. 4 hourly retraced into this discount area, and it retraced also to this overlapping fair value gap zone levels, as you can see. So on the 1 hourly, what we saw was also price took this Asian session high. So of course, on the way to the upside, we had also a bullish fair value gap zone. But what do you notice here? After price took the Asian session highs up here, price shifted its momentum to the downside. And as you can see how price didn't respect this previous fair value gap zone at all, and it just broke it to the downside. So this is the point of time where we said we can look for potential structure shift. So if you have, let's say, Asian session high as a buy side liquidity, what we are looking for is, of course, for the market to take those highs in this example, to take this liquidity, and then as soon as this liquidity is taken, we want to see market structure shift to the downside with price making lower low in this case, and then also leaving us a fair value gap zone in between of this breakout, and then we want to see a retracement back and then looking for possible continuation. So in this case, this was the 1 hourly time frame, but this is the scenario we were looking of course on the 15-minute time frame in this case. So just going forward to the 15-minute time frame, let me zoom out a little bit on the 15-minute time frame. As I said before, so we set on the 1 hourly, this is the Asian session low, this is the Asian session high, and as we are approaching this Asian session high, price took this liquidity. It spiked, as you can see, for almost the whole hour here, and as we said before, we want to see market taking this liquidity out and then shifting to the downside and leaving us, of course, also fair value gap zone as an extra confirmation for potential market structure shift. So my idea, our idea with our students was that as long as we have this structure shift to the downside, market breaking all those previous lows, taking this liquidity out prior to that, and moving lower with bearish fair value gap levels, we wanted to see, of course, for the price to, as soon as the London opens, we wanted to see, of course, a retracement back towards some levels of fair value gap zone in combination with some previous support and resistance here in order to target this yesterday's low, the 4 hourly sell side liquidity. In this example, as you can see, this was the yesterday's low, and our idea, of course, was after this structure shift to the downside, we wanted to see setup and retracement prior to price taking out those lows. And as you can see, price was really powerful. We didn't have any retracement, and price actually spiked here. So this was not what I wanted to see. As you can see, here we had previous lows, and price, as you can see, spiked here. This liquidity, the hard time frames, 4 hourly sell side liquidity was taken, and therefore I was not interested to trade this pair. I wanted to see a retracement prior to price taking that hard time frames sell side liquidity. So in this case, we were not taking that trade. Yes, of course, market retraced back towards some previous order blocks on the 1 hourly, and then moving lower, but I didn't want to see this liquidity to be taken, and therefore I didn't take this selling setup. I wanted to see retracement prior to this liquidity to be taken, and then looking for possible short trade here on the euro. And as you can see, after this retracement, price continue moving lower in this bearish structure. And later on, within, of course, after the news came out, and after the New York session opened, we had also this nice, beautiful structure shift later on. As you can see, we had a bearish structure, lower low, lower highs, and then after the New York opened, we had nice structure shift here, as you can see, between this overlapping fair value gap levels here, and this is yes, the price action on the euro USD so far today. We have also interest rate decision about the USD later on. So as you can see, how you can miss those setups, not setups, but how you can miss those moves, because you are disciplined, you are respecting your trading plan, and it will happen that sometimes price will not give you what you want to see, and if that's not what you want to see, at the first place, as for example in this case price taking out hard time frames liquidity before giving you a retracement, an opportunity to participate into that move, then of course it's totally fine. You don't and you should not, let's say, make yourself angry that you missed this move. For example, it could be a nice risk and reward trade here, and you should not be mad. You should not be mad and angry that you missed this kind of move, because you are following the plan, and trades are like buses. There will be always another trade coming, and all you can do is, of course, you to analyze your trading day overall, from your preparation to your waiting mode to your execution or not execution, as for example in this case today on the euro US dollar. And of course you can just do your post analysis in this example, what you did right, what could be done better, and you just come back tomorrow after the news, you prepare yourself properly again, and then you yes, of course you focus yourself on the trading process overall. Again, do your analysis, prepare your levels, prepare your potential scenarios, what you're waiting for, and then if the scenarios appear within London or New York or trading session you're trading, of course you take action. If not, then of course you come back later. You must always do anyway the analysis of your trading day, how you prepare yourself, what you did right, wrong, and if you execute any trade, of course you have to review it, how you saw this setup and how you executed and manage this trade overall, so you can prepare yourself properly for the next trades ahead. And this was a great example today on how you can prepare yourself properly, how you can you know, kind of follow the right direction of the market, the right structure and environment. But of course at the end you can still miss those moves just because price is saying you're not invited to the party, you're not invited to trade this one. And if the market don't want to trade you to trade it, then of course then you just relax, you analyze, and then you come back tomorrow, because trades will be always there and new setups will always come. So thanks for watching. Hopefully you learned something from this video, and we catch up soon. Take care.